So have you ever been watching price action move? You see your criteria, you're about to get in the trade, but then in that moment, you hesitate, you pause, and you watch the whole trade happen in front of you just to not be a part of it. You sit there, paused in fear, with doubt, even though you know this is exactly what your edge looks like and you're supposed to be getting in the trade. But instead, you stand there with complete hesitation and reservation, and you watch the trade go by you, unfold. Maybe even your friends are in it. Maybe you're missing it. Well, today in this video, we are going to break that barrier of doubt. I'm going to show you exactly what I've done in the past to help me get past that horrible moment of despair and doubt that keeps you from becoming the trader you're supposed to become. See, over here at High Performance Trader, we are a principle-based group. We make decisions each and every single day in the market based off principles. We don't make decisions based off emotion. We make decisions based off probability. And we have accumulated this data, and we have studied this data, and we are continuously modifying this data so that we can pull triggers exactly when we're supposed to. See, most traders go through this around that 2 to 3 year mark. Maybe it's different for you. But you've been burnt enough to know that this game is very uncertain and it's not always going to move the way that you're predicting it. But today in this video, I want to teach you it's not about being right. It's about being confident. It's not about always making money. It's about consistency. It's about your approach. I want to break down the Bistheorum, and this is a principle that has helped change my life. So before you're going to see a very simple trade that we took. Very simple trade. Nothing crazy, right? We have open print right here. We have our criteria. We get our moving average cross, and we get our red bar that's ignored. We enter long, and we literally capture a $1.50 move in about 4 minutes, making us 42% ROI on SPX. Very simple trade, right? But watching and looking at this trade, I'm thinking in my mind, there was a moment in time where I would have stood sidelined and just watched this move happen because of doubt, because of fear. This is one of the most crucial barriers that we must get past as day traders if we want to become the absolute best versions of ourselves. So I want to break down in this video what has helped me learn to pull triggers and to actually capitalize on all that information that we have learned and stored in our brain. So I want to break down over here the Bayes theorem, right? Now the Bayes theorem is a principle in mathematics and science, but it can also be applied to the stock market, right? So the principle, the Bayes theorem describes the probability of an event based on prior knowledge of conditions that might be related to the event. It provides a way to update the probability of an event as new evidence is acquired. This is literally the definition of a day trader, right? So over here, the application used in fields such as machine learning, medical diagnostics, and decision making under uncertainty, where new data continuously updates the probabilities of different outcomes. And what I'm starting to realize, and I'm sure a lot of you guys do too as well, is the principles we use in the market are applied all throughout the universe, right? The law of large numbers, right? The more data you collect, the more the outcome converges to a mean, right? That is literally universally applied. The law of polarity, right? For every action, there's an equal and opposite reaction, right? These are principles that work in the universe, in science, in mathematics, but they literally work in the market as well. Why? Well, the market is nothing other than behavioral science and mathematics. So the more we understand these principles, the easier it's going to be for you to pull triggers, execute, entry, exit, stomp out exactly when you're supposed to, right? You need that awareness. You need that understanding of how and why the market works the way it does. This way, when you see what you're supposed to see, when you identify your edge, you can actually pull the trigger when you're supposed to, right? So I have the principle up here. It's stating what it is, and then below you're going to see this is more of like an application, right? Like how to do it. And instead of just reading all this, I'm just going to let you guys know basically what the Bayes theorem is when you collect data, right? You back test, you log every trade that you're taking that fits your criteria, what you do is you develop an expectation of what's going to happen when you see this criteria. And that's exactly what we do each and every single day at High Performance Trader. If you come over here to our Discord, we have the HPT crossover. We have all tons of different trading strategies, but today we're going to be focusing on this specifically. And what it is our 3-step criteria. This is our approach every single day. We have a very repeatable approach, and it's very simple. And we're going to break down what it is. But the importance of the Bistheorum is that we have collected the data on this approach for the last 4 months. This win ratio on average, right? The win ratio of this strategy on average in the last 4 months is 82%. So we know that there is an 8 out of 10 expectation for this criteria to yield a profitable trade. So with this understanding, with this knowledge, with this awareness, we now have conviction, right? Conviction is that feeling in the pit of your heart, in your spirit, in your soul, that when you see your edge, your criteria, each component that makes up your strategy, when you see it, you act. Your attitude is aligned with exactly what you're trying to get. You're trying to become a profitable trader. You're trying to be consistent. So you have to let go of the need to be right, and you need to hold on to your expectations. And this is why I'm constantly preaching, collect data, execute your trades accordingly, and then modify your approach as needed, right? So now that we understand the Bistheorum, I want to break down the trade and what it is we did, how we were able to capitalize on it. It was a very simple trade. I'm going to break down, starting from the beginning, the pre-market plan so you guys understand the whole approach, right? So I am a price and volume analysis trader, which means I focus on areas of price that have a lot of volume. These areas for me are the pit numbers. This is previous day high, low, open, close, right? These are the 4 main price points of every single daily time frame candle. So every single day I identify these crucial levels, right? We have previous day low, we have end of day, and then we have previous day high right up here. And these are our pit numbers, right? Price in pre-market is selling off below these levels. So there's 2 scenarios that can happen in my mind, right? Sellers can either defend previous day low and price sells off, or buyers can control the open and we rip into previous day low and then we rip into end of day. So if you come over here to my Discord, you're going to see my pre-market plan is extremely simple. Every single day I approach the market the same exact way. Where is it? Right here. Okay, Critical SPY pre-market plan, January 13th. Watching for buyers to show strength in structure today off open print. If we can get buying acceptance above this level, I'm interested in longs targeting previous day low and end of day for the gap fill, right? So I'm looking for a move either into previous day low and end of day to close the pre-market gap, right? That is my bullish scenario. My bearish scenario is I'm looking for sellers to maintain dominance by defending open print in previous day low. Downside targets are etc., etc. So I'm using my 50-50 perspective, right, to go, hey, there's 2 scenarios that can happen today. Buyers are either going to take control or sellers are going to take control. What do I use to make that decision? And this is where our criteria comes in, right? So now that we have our 2 bullish and bearish scenarios, we now go, okay, whoever can control open print, I am going to trade with. So this right here is open print. It is the opening print price right at 9:30, right when the bell goes off every single day, right? So we have open print. We're going to make this yellow. We're going to put the name on the left. Bam. So now we have one job: to remain patient and wait for our criteria that we've collected data on, right? To implement the Bistheorum, we must be very clear on our approach, and when we see it, we must execute it without hesitation, without reservation. The only way to get to this level is by building confidence, control, and conviction within yourself. So when you see it, there's not even a question, right? And the only way to do this, guys, is just by backtesting. It's just the reality of the scenario. The more you backtest, the more it makes sense to pull the trigger when you see it, right? If you're dealing with hesitation and reservation and doubt and fear, you just haven't backtested enough, right? So I know when I see buyers defending open print, right? Look, sellers cannot get price below it. They're trying over and over, but they cannot close below open print. Price rallies, completely disrespecting this red candle, and then comes down, retests this previous disrespected red candle, and then once I'm looking at the market right here, I'm going, okay, I have my calls loaded. I'm ready to take the market long, targeting previous day low. What do I need to actually pull the trigger? Well, I need buyers to disrespect this candle, which means if they can push price above this candle by 1 cent, the high of this candle right here is 576.96. Meaning if buyers can push price to 576.97, I'm in the market long. That is what we call an RBI, a red bar that gets ignored. So if I come over here to our Discord, I'm going to show you guys exactly where I called this out for the team. In longs here, right? This was at 9:53 a.m. and you can see I'm posting a chart of SPX and SPY. We have a red bar completely ignored. Bam, I'm in longs here. Look at price, 576.99. So by the time I actually screenshotted this, we beat that candle by 3 cents or 2 cents, and now I'm in the market long, and my stop is below that candle. Look, stop below previous red bar. And look at, so at 9:53 a.m. we're in longs, and at 9:56 we are already, price is already rifling more than $1.50 away from our entry. And then we booked it at 9:57, right? So just like that, in 4 minutes, we capitalized on a trade that had over 40% ROI, $500 a contract, executing flawlessly. This was a massive win for HPT, but yet again, it was just another day for HPT. This is nothing out of the ordinary. This is our edge. This is our strategy. This is what we look to repeat and identify and execute on each and every single day. If you guys want access to our data reports, our high-level summaries, so that you can start building this confidence, this control, this conviction, so that you can become the trader that you're supposed to become, you have to click the links below. Get involved with HPT. Even if it's just filling out our newsletter, we are building something great over here because I understand what keeps traders failing. It's that doubt, it's that fear, it's that insecurity, but more importantly, it's just because they don't have the data. You are not stupid. You are just a little bit lazy because you're not collecting data, and that's fine. Come use mine. Come join my team. Click the links below. Get affiliated with a team that puts in work each and every single day. I love you guys. Thank you for all the love. Make sure you hit a like, subscribe for more content, share this video with someone that needs it. And if you are interested in learning more about principles in day trading, I'll see you in the next lesson.